This is the briefing for the weekend of July 23rd. Being technical analysts that we are, we know that chart patterns have a tendency to repeat themselves. The way I analyze the markets is through market development and market structure, meaning analyzing the development of the trend of price of a financial instrument in various time frames, and then looking at the structure of that or the internal strength or weakness of that move, trying to determine as a market is coming into a support or resistance area whether it is strengthening or whether it is weakening, and or I should say the trend is strengthening or weakening, and whether there's going to be a reversal, and then trying to determine the greater degree time frame trend to determine whether I'm trading in a counter trend analysis or whether I'm trading in the main trend, keeping in mind that if it's a counter trend, it's typically tradable. But then, of course, we don't know when the main trend will re-exert itself. So based on that, I want to start with a little bit shorter term analysis. Now, I've covered this previously in previous briefings, but I think this is important. Now, the two things in terms of the stock indices that I look at are volume and market breadth, along with unbalanced volume. At times I look at RSI, although not that much. And then I look at the new highs minus the new lows to determine the overall strength of the market. Now, in an uptrend, there are still stocks that go down. Downtrend, there are still stocks that go up. But the majority of stocks will go with the trend of the indices themselves. So I really want to know, even if I'm trading an individual stock, I really want to know what's happening with the overall market from a macro perspective. Now, we've broken out of this area of rotation, and I've covered this previously. This is the spiders, this is the Qs representing the NASDAQ. And you can see we broke out in both indices, broke out pretty substantially. But then on Friday, we had this reversal that took place. We had a reversal on Wednesday also that looked like we were going to trade back below support. This was resistance. It's now support, coming in right around the 391 area in the spiders and about the 296 area in the Qs. So what's happened here is, as we look at this move, this breakout move, so we have to understand whether this is strengthening and it is attracting more buyers, and whether it is attracting more participation in terms of the number of companies that are trading higher as opposed to lower. And what we find out in looking at market breadth here is that this move is not strong and is weakening the higher it goes. And you can see that right through here with market breadth, that it is declining and declining pretty dramatically until we came into Friday's trading, when it actually just then sank. And the same thing occurred with NASDAQ breadth, the number of shares trading higher minus the number of shares trading lower. We have this breakout move, and then of course market breadth was increasing until the breakout, and then of course it declined and declined pretty substantially until Friday's trading, when we got a pretty negative thrust lower in the NASDAQ. So basically what this tells us is that this move here is just not strengthening. In fact, it's weakening, and we had to determine some type of counter trend move, whether it's a move to test support again, which was resistance, or whether it is just a pause in the breakout move that would lead to another leg higher. So, and even going into Friday's high, you can see Friday's high here, and you can see the divergence that occurred in market breadth. So even though they tried to push it higher, there were more companies that were trading lower as opposed to higher. Now, if we look now at the next component of volume, this is the spiders. And I did these ellipses to show the rotational pattern and how the market spends most of its time in rotation. And then periodically you get vertical development in one direction or another that leads to another area of rotation, vertical development, rotation, vertical development, and then rotation. And this is the same area. This is Friday's trading, Thursday and Wednesday, when we had the breakout move. So this is the divergence in breadth that occurred. Now, if we go back and we look at what has occurred, this happens to be volume. So you can see the move down was supported by volume. It attracted more sellers. Then we had this pause right through here and this rotation back to the upside. And as it went higher, volume fell off. Then we have this additional move to the downside, volume increased, another move to the upside, volume decreased, and then we had this move back to the upside, volume increased once, or I should say decreased. Then we had this move to the downside, volume increased. Once again, a rotation up, volume decreased, volume continued to decrease through this rotation, and then of course this impulsive move to the downside had pretty significant volume. Now, we also had this divergence right here. I want to point this out. You can see this low and this low is a lower low, and you can see that volume was falling off. That was a pretty clear indication that this move to the downside was complete. We had a buying tail that came in and that we were going to get some type of rotation up. Not knowing how far it would go, it went and actually rotated right around the 410 area, which was an important area. And then, of course, when we got this breakout move, volume increased again. And then really from June 17th until Friday's trading, June 22nd, we've been just in a rotational pattern with the breakout move on Wednesday, sustained on Thursday, and then on Friday, it looked like we were going to retest support and potentially trade back through it. But the important aspect here is that volume is not increasing on this breakout move. In fact, volume is decreasing. So while we look at the probabilities of one event occurring over another, in other words, is the market going up or is it going down? We have to look back and say, okay, what information does the market give us that would lead us to the probability assessment of a greater probability of one event occurring over the other? In other words, is it a higher probability we're going higher, or is it a higher probability we're going lower? Based on the divergence in breadth, the decline in breadth, based on the decline in volume and what we've seen in the past, I have to come to the higher probability that at some point in time, unless the structure or the internals of the market change to support this move, it is unsustainable and we're going to see some type of rotation back through this range. Now, it is always a higher probability that price will correct to the internals. In other words, if the internals are weakening in a trend, then price will correct to the opposite of what the trend was. So in this case, this happens to be an uptrend here. And so because the internals are diverging, then the higher probability is we're going to see some type of rotation back to the downside. And the trend is down. I mean, even if you look at this move here, looking at the weekly chart, you can see pretty clearly the trend is down. So we have to then come to the higher probability that this is a counter trend move. In fact, it could even look like a three-step counter trend move, and that we're going to see some type of additional move back to the downside, potentially testing the June 17th low and possibly even taking that out. Now, the higher probability, at least the information the market is giving us as of Friday, is that we're potentially going to see another leg to the downside. There is also a smaller probability that we're going higher. And that probability would have to be supported by the internals changing and supporting the rally that we've seen since the 14th of July from this low here up through here. So that typically is a lower probability. Typically, price will correct to the internals. But if there's a news event, then that is the typical thing that would change the perception of value on the part of traders, and the internals can change to support price. So basically, we have a pretty significant news event coming up this week, which is the Fed announcement on an increase in interest rates. So I have to be cautious going into this week that while the chart is telling me and the information from the market is telling me, the internals are telling me that we're potentially going to see a rotation back through this range, I have to be aware that there's a news event that could change that perception of value, and volume could begin to increase on the rally, and bread could correct the divergence and it could increase as well based on that information. But until that comes out, I think that comes out on Wednesday. I think at 2:15 or 2 o'clock or 2:15. We have to go with the fact that between now and then, the market has given us a pretty good analysis of what it's happening, and that the structure of the market is not supporting this current rally, and that we will see some type of rotation back to the downside. Now, the NASDAQ is basically in the same situation. This is the Qs, I should say. You can see the divergence in breadth that occurred over the last 4 days of trading. The rotation here, the breakout move, and potentially now a retest of this breakout. So that's potentially a significant event as well. In terms of the Russell, got the same situation. You can see the rotation. You can see this is not Russell breadth. This is NYSE breadth. And then that rotation up. And the Russell actually did retest and traded slightly below this support area, right around the 178, 179 area. So that's going to be very interesting to see what happens in Monday's trading. Looking at where we are in terms of overbought and oversold, the NASDAQ was much weaker in terms of its breadth reading on Friday. So it has reached a point of being almost oversold. But the NYSE is just basically neutral. So the NYSE has a long way to go before it gets to extremely oversold. NASDAQ has a little ways to go before it gets extremely oversold as well. So basically, I would have to suggest, at least in terms of my strategy for the coming week, is at least for Monday and Tuesday, that I really want to be leaning more to the short side of this market, unless of course, we see price continue to rally and we see the internals begin to support that price. Now, there is nothing to preclude the market on Monday and Tuesday from retracing all of Friday's losses, because we really have not had any extreme selling pressure, at least at this point in time. So you can even see that this rotation down on Friday was met with extremely low volume. In fact, volume fell off through the whole rotation lower. So looking at where we are in terms of the longer term time frame, the internals are telling us that the market is weak and weakening, but the shorter term internals are telling us that this is not yet an impulsive move. There is not yet a lot of selling pressure, and therefore it is easy for the market to retrace all of this on Monday and potentially even put in a new high. So where we are then is that we want to look at this shorter term area of rotation, If we take out that high, then that's going to suggest the higher probability of testing the high of Friday. Same thing with the spiders. If we take out the low, that's going to suggest a test of very important support. But if we do take out the high, I want to be sure that volume is increasing, breadth is not continuing to diverge, and that there is some strengthening coming into the market. Alternatively, if we take out this low, that suggests that we're going to test these very extremely important support areas, because if we trade through them and close below them, then that's going to suggest rotation back through this range, which is going to be a fairly substantial move. If that occurs, I want to be sure that breadth and volume are increasing, just as we saw here, that they're increasing on the moves to the downside, especially volume, and that it is supporting the move, and we will break through this very important support area. It's going to be a very interesting week next week. Typically, the day before a Fed announcement, traders step back and we just see rotation. It's anybody's guess as to what's going to happen and what the market is going to interpret from that announcement. But I will definitely pick this back up on Monday and Tuesday again next week, and we'll be taking that into Wednesday's trading. Have a great weekend.